Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. PCLN NVDA TSLA CMG and NFLX, not in that order. You get the idea. PCLN on the daily time frame, lower high forming here, still unable to break 1835 resistance. We got up to 1833. We're getting close. But where we stand right now, it's likely going to take a new market all-time high in order for the bulls to get some momentum to break this pattern. And we're still watching the 50-day moving average support. That's down at 1799, still holding for these bulls. So the bulls are clinging on. They do have the slight edge just in terms of establishing that support. But if we cannot break 1835 tomorrow, we will look to head back down towards 1800 psychological, which is where this 50-day moving average will be tomorrow. So the weekly time frame still has the bulls in full control. There's no slowdown at this point. The exponential moving averages are holding on strong, and it's just normal healthy consolidation currently ongoing on the daily time frame. If we were to lose this 50-day moving average, it would become more than that, and we would look down to fill the gap at 1766. But until that happens, the bulls are just fine longer term. Very clear little lower high and lower low here on the shorter term since earnings, and need to see a break of that 1835 level to break that pattern. NVDA, new all-time high today right at the open, but then a pullback from that open and a lot of profit taking. So the bulls need to see support form and a new higher low. Anything above 126.92 will do it for the bulls. There's a gap down here at 133.29. If we do see some more downward momentum tomorrow, that will be our target. So 135.22 would be the level to hold. If that breaks, we're going to start filling the gap. And again, that would fill at 133.29. All-time high resistance is just under 140 psychological. That's at 139.79. And the weekly time frame still showing a lot of strength, but a little bit of indecision as we do see some consolidation in a very tight range. We're still above the upper Bollinger Band, so the bulls are still in full control on this weekly time frame. That upper Bollinger Band is down just under 132, so we have $5 of wiggle room before that's even a factor. So bulls are certainly still in breakout mode on the weekly time frame. Tesla on the daily made a bear break, and we pointed out how it was one of the weaker names because of the lack of follow-through on the bounce, not even seeing 2 green days in a row when the market is on its 4th green day in a row. So pulling back, lower high and lower low. The break of support occurred at 305.31. It was a very clear bear break, and we closed at the low of the day with a lot of momentum favoring those bears. Support is 300 psychological. The 50-day moving average will be just below 300, and then we're looking down at 290.76. So that will be a target if we do see continuation to the downside, but first things first, we're looking at 300 psychological. Weekly time frame is testing exponential support. We have not lost that in the past 3 months. So if we were to close this week below 303.32, we would lose the 4-period and 8-period exponential moving average supports, and the bears would be taking back short-term control. Again, this could even be a bull flag with the upside that we have seen at this point. So certainly not writing off the bulls on any of these longer-term bullish charts, just seeing some consolidation on the daily time frame. And Tesla right now is one of the weakest names on this list, but really look at the daily time frame with Tesla and CMG, and then we'll get to Netflix here, but it's really the past 5 days are so similar. And I know there's nothing correlating burritos and electric cars, but there's definitely a logarithms trading these in my opinion, because look at the past 5 days. We had the dump day, one nice strong bounce day, weak follow through. Yesterday, bulls bought the dip and held support with a lower wick, and then today we dumped and closed at the low. CMG, bullish reversal bounce day, lack of follow through. Bulls defended support and bought the dip just barely yesterday. Bear break, close near the low. They're really the exact same pattern on the past 5 days, and I'm not seeing that on other individual names. So CMG now has a little lower high and a lower low in the short term. Support is down at 465 and 466. Those are the ranges we're going to be looking at from here, and we close at the low of the day with bears favoring that momentum. Middle Bollinger Band is now resistance after we closed just below it a couple times, but obviously this is a much more convincing close below that support. And the bears are in control of the short term. And what we have with Tesla and CMG is if the market does begin to consolidate, as I do believe we are due for, that will only magnify this pullback a bit if we do see the market correlation. We know CMG certainly does not correlate with SPY more so than other names. But as of right now, the bears have momentum. Weekly time frame after three rejections in the past 4 weeks from the 100-week moving average resistance. We broke the higher low pattern on the weekly, and we're seeing some consolidation. It's normal and healthy consolidation at this point, but it is consolidation nonetheless, and the daily momentum has shifted to the bears. Wrapping it up with Netflix, still a weak bounce attempt, 4 bounce days, and still unable to break the high of Wednesday. The S&P 500 broke its high of Wednesday 2 days ago. So 158.78 resistance, 158.60, and an inside bar on the daily time frame today. A break of 158, make that 156.80 tomorrow would be a bear break, and we have the lows of each prior day as support, and a bull break would be 158.31. This is going to be a decent inside bar to be playing tomorrow for some day trading, and I do believe a bear break would be more likely than a bull break, but the inside bar play is to always wait for that break to be sure that momentum is in your favor. Weekly time frame for Netflix, still a bull flag potential here as well. After 3 big weeks to the upside, normal healthy consolidation, holding exponential support, and looking for a potential continuation if the bulls can gather themselves, form a little higher low of consolidation, and then head back up towards the all-time high. So basically where it all boils down to is we have plenty of long-term bullish charts here, and it's just the daily time frame showing some weakness, some more so than others, and watching to see how everything reacts when the market does consolidate. After 4 bounce days in the market, consolidation is not far around the corner. I appreciate you watching, and we'll check back in tomorrow. Have a fantastic night.